Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the world. In this edition, the changing of the guard. Fonterra chairman Henry van der Hayden departs next year after a decade in the job. What's the future for the leadership of the board? The role of China in the coming years for New Zealand agriculture. The latest intelligence from a special KPMG Asia-Pacific think tank. And help is at hand deciphering which political party will do what in the world of rural policy as you prepare to head to the polls on Saturday. But first, the European debt crisis turmoil continues with no end in sight. Joining me with the latest information on all the markets is ASB rural economist James Shortall. And James, this week, one word, Spain.
That's all about Spain.
It's all about Spain. Man, we're going around the world, aren't we?
I know, we are. And there's also been talk over the past 24 hours about what's happening in France too. So it's action stations in Europe, and we've seen another leader fall in Spain.
Yeah, this is like 6 European countries now where the leaders have had to come and go, and the socialists are out in Spain after 8 years. What's going to happen, do you think, there?
Well, I mean, people want change. People want jobs. They want a new economy. They want a fresh start. So they're searching for people that are able to be able to provide that. It's pretty difficult for them to provide that right now, but that's going to be one of the key things, and it's happening all across the world, I think.
In Spain, of course, huge country, 46 million people, an unemployment rate of 21.5%. Makes us look pretty good here at home.
Yeah, it feels quite good right now, but also youth unemployment in Spain is just diabolical. People just can't get jobs. There's lost generation. Similar sorts of things happening in Ireland, where people just can't get jobs, leaving to go overseas. So it has long-term effects. What's happening now will have long-term effects.
And of course, back in the U.S., they have now a super committee. They just keep coming up with these crazy new names for these bipartisan committees as they wrestle with what to do about their huge debt situation. It looks like they have missed their latest deadline as well.
Well, yeah. So when they were trying to agree on their debt ceiling, one of the outcomes was, look, let's set up the super committee with a even split between Republicans, Democrats, and you guys can go and decide how we're going to cut this money. We've got to cut money out of the budget. Their deadline is this week. They haven't been able to do that. They haven't been able to come to an agreement. So that issue is going to continue to go on, and it's unsettling for markets if they can't agree. What other economies can't agree on cutting deficits. So there's going to be some automatic changes coming into the mix. One of those is going to be military spending is going to get the cut off the bat, and other, I guess the decision's already been made. So it's a bit unfortunate.
Well, that's one way to bring the boys and girls home, I suppose. Just slash the budget, don't pay them anymore.
That's a good point. That's a good point. I guess some of the other things that are going to come out will also be interesting. But big cuts across the board, I guess, for a lot of different spending in the US. Now,
the Kiwi dollar has gone down to what, 74.7 over the past week. Tell us what the latest is there.
Yeah, the Kiwi dollar, I mean, remember, it's not too long ago we were trading 88 cents against the US, and now we have just crumbled. That's 15 to 20% drop just over a couple of months. So we've just been sagging. We over the past 24 hours, we've effectively traded sideways. We're still trading around that 74.70 mark against the US. And with all the issues in equities, we're just following the boat, I guess, in a lot of ways, with a lot of risk averseness. So that's people not wanting to take too much risk in the market. Then they've been getting out of the New Zealand dollar. That's why we've been falling. And until we start to see things settle down, we're probably going to remain a little bit weak against the US.
Some analysts are now picking that the OCR could change as soon as December the 8th. Would you put your money on that?
No.
No, too soon.
No, I think far too soon. The interest rate market, that's the other thing that we've seen that's been really noticeable over recent weeks. Interest rate market has been very, very pessimistic about where things are going, and that's been offshore drivers. Bonds, those sorts of things have been low. There's been a lot of demand for New Zealand government bonds. They see New Zealand as being a good place to invest their money, but that also has an effect on interest rates. So interest rates are very, very low right now. In fact, the market is pricing in that there is a possibility that the official cash rate could be cut over the next 12 months. We don't actually think that's going to happen, but the market is very, very flat right now.
But also, you say that our interest rates here are low, but not as low as a lot of the parts of the world where it sits at 0%. Of course, the other thing that I'm hearing is that even if floating interest rates, for example, fall, guess what? The banks may not go for it because they get their money from offshore and they got to pay the banker like everybody else.
Yeah, so that is some of the issues that we have. The New Zealand banks have to source some money from overseas, and it's getting more and more expensive to source that money from overseas because people are just a little bit concerned about what's happening, and they're not making that as freely available as previously. And when they do make it available, then they're charging a bit more for it. So, while the official cash rate is still relatively low in New Zealand terms, interest rates, probably still not quite as low as what they have been previously because there's still those funding premiums in the market.
Bit of comforting news. Commodity prices remain pretty darn good. Global Dairy Trade Auction had an excellent result.
Yeah, well, it's really interesting because right now, while we've got all these negative issues going on around the world, then it's actually been probably one of the best times for farming and best times for agriculture in New Zealand that we've seen in maybe 20 years. We've got low interest rates. Still got pretty good dairy payouts, dairy commodity prices. Lamb prices have been at all-time highs. Beef prices are looking quite good. Wool prices are at extremely high levels. So, it's actually in a pretty good position, and the Global Dairy Trade Auction last week did show a mild increase in prices, which is really positive. Dairy farmers have come off well over an $8 payout, and this year is still looking pretty good. So things are actually pretty positive in agriculture.
Thanks, James. Coming up after the break, is it the beginning of a soft commodities and rural land boom? And is it really kicking off in Australia? Buying up farms big time across the ditch. Coming to a town near you soon? KPMG Agribusiness partner Ian Proudfoot is in the house to give you the latest inside oil on how Asia will affect agriculture here at home. And who you're going to vote for, what you need to know about rural policy before you cast your ballot, your last-minute tips. But first, the Mexican government has just removed a 20% tariff on New Zealand kiwi fruit imports. Zespri is already looking to set up a pilot plant to produce the fruit in Mexico during our off-season. So answer this in our Farmers, Facts and Figures quiz. How much money will the removal of the 20% Mexican kiwi fruit tariff put back into our industry's pockets each year? The answer when we return. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, how much money will the removal of the 20% Mexican kiwi fruit tariff put back into our industry's pockets each year? The answer? $1 million. On another note, Fonterra chairman Henry Vander Hayden is stepping down next year, a year early, after a decade on the job at the helm of New Zealand's biggest company. So let's start with that L word, leadership. Joining us now is Ian Proudfoot, Agribusiness partner for KPMG. Ian, great to see you.
Thanks for having me.
Now, what's the legacy of the leadership that Sir Henry Vander Hayden leaves behind at Fonterra, do you think?
I think Sir Henry's been instrumental in shaping what is now New Zealand's leading company and our only truly global company. The company has a clear vision of where it wants to go. It dominates its space in terms of tradable dairy exports, and it's very, very good for New Zealand.
What do you read into the fact that he's now stepping down a year earlier than he had indicated? Do you think it's unhappiness among TAF, among some of the farmer shareholders?
I think if you look at globally large companies, 10 years in charge is a very long time in charge, and very few leaders of those companies ever last that length of time. I would imagine Sir Henry's looking for a bit more balance in his life. It's probably been all-encompassing for the last 10 years.
Now, meantime, interesting, a banker, Sir Ralph Norris, a Kiwi, is going to come back here, and he's going to be sitting on the board as of next year, I believe. Question is, he's making what, something like $16 million now where he is. Is he going to want the gig over here?
Why not? I mean, he wants to be part of a global company, exciting company. It's interesting that he used to be the chief executive of ASB Bank, and now he's chief executive of Commonwealth Bank, which is ASB's parent bank. So we're actually going to send him, the rural team at ASB are going to send him some gumboots over, so just so that he's going to get comfortable with the with his new role with Fonterra and in the New Zealand agricultural sector. So
that's a great idea. How do you think he's going to go?
I think he'll be great. I mean, he's a Kiwi. He's passionate about New Zealand. He's been, apart from the few years that he's been in Australia, just recently he's headed up Air New Zealand, changed them around quite a bit.
Yeah, had remarkable results.
So I think he'll be an asset to Fonterra, and especially at the board level too.
But apparently there are 2 petitions circulating at the moment. What we hear from farmers, they're not happy with TAF, with the technical details. They haven't been able to get the legislation to work to push it through. Is this going to be a problem for Fonterra, Ian?
I think it's something Fonterra need to fix, and obviously now the new CEO's taking a little bit of time to get himself settled in and look at TAF and get a structure that's going to work for farmers. But the need for permanent capital, and I think the point was made at the AGM last week, that if Fonterra is going to grow and be as successful as its potential to be, the permanent capital has got to be there. So TAF, or a version of TAF, needs to be worked through, and needs to be worked through early in the next government term.
Let's move now to the Asia Pacific. Ian, you've just come from a think tank at KPMG with your Asia Pacific partners. What is the latest intelligence? What do the farmers here need to know about what's moving and shaking, baby?
Well, I think the key message that comes through very clearly is what's happening in China, and then flowing that through the whole of Southeast Asia. And you were talking before the break about the impact that Europe's having on its economies, and everybody's very concerned about how that's going to flow into China and what sort of contagion we're going to see. China hasn't succeeded in developing as strong a domestic market as it needs to. It still relies very much on pushing exports out to the US and Europe, and if those markets sort of take the downturn that it looks like a lot of them are going to take in the not too distant future, then that raises some significant questions about whether that sort of 9% growth we've seen in China for the last few years is going to be there for the long term. That said, the key thing is China needs more food, and needs that food really quickly. So when you look at it, the prospects, I think, for New Zealand agriculture and our New Zealand farmers remain very, very strong, because the safe, secure food that we can produce is still going to be very much in demand, and I think you'll find that people will continue to look to buy that, and buy it at the sort of prices they're currently paying.
The critics will say even if China slows down, it's still a pretty good deal, but is it? Are we going down the right road, really? Well,
there's obviously always risks around going to one specific area and relying on it too much, but right now I don't think there's too much of that risk. If we are able to develop markets as time goes on, then that'll be quite critical. If we continue to just push product into China, then there are some risks. But right now, as we sit today, I think we're still in a relatively good space.
Yeah, and if you look at it, you take Indonesia. It's a huge market. They've just adopted the ASEAN Free Trade Agreement +2 with Australia and New Zealand. So we're going to have free trade rights into Indonesia from early next year. That's a huge benefit. India is another huge story in Asia. And unfortunately, from a KPMG perspective, India is like the elephant in the room, because that sits as part of our European region. But when you look at India and when you work through the issues, the potential in India is huge. Admittedly, there's some political concerns there with Sonia Gandhi at the moment and her health. But that economy is going to grow rapidly and have probably a bigger middle class than China. And they take dairy product already. That's part of their culture. So the potential for New Zealand in that market, I think, is probably the biggest market opportunity for us.
Not to mention Vietnam, for example, Cambodia, where I know you traveled earlier in the year.
We heard some pretty negative things about Vietnam at the moment. I think that economy is probably overheated a little bit and grown too quickly, too fast, and probably is going to be in a cooling phase for the next couple of years.
I want to turn our thoughts now to the election, just a very few days away. But before we get there, I see over in Australia, you sent me a fascinating story, James, about foreigners going in and really targeting prime farmland in Australia. Foreign investors coming in, setting up funds. Is it going to happen here? Tell me more.
Well, I think there's potential. I mean, we're already starting to see, over the past 2 years, we've seen foreign companies, particularly Germans, coming in and buying dairy farms south in Canterbury and the South Island. So we're starting to see a little bit of it, but obviously happening much faster in Australia and a lot of these global. I mean, you do a couple of internet searches and you start to see there's some huge funds, some huge hedge funds that are looking to invest in Brazil, in Australia. They want large tracts of land, and they're seeing big scope. They're very bullish about agriculture, very bullish about where the price of agricultural land is going to go to.
And yet you come to a country like New Zealand and we're still waiting to find out what the heck's going to happen with the crayfish farms. We seem to be dragging our feet. We're not sure where we're going. Is there a lesson for New Zealand, do you think? And this brings, of course, to asset sales, a hot issue. Asset sales, pro or con? What do you reckon?
Well, on the farming side, I think Australia have suddenly woken up to the fact that they've sold a huge amount of their land overseas. Companies like Assad out of Kuwait, and James Packer sold his big pastoral farming operation to a British hedge fund. There's a huge amount of assets that have been sold out of Australia. Do I think that's going to happen in New Zealand? No. I think the basic reason for that is our land is too expensive and they can buy land cheaper elsewhere. But I think we will be seen as somewhere where you can get land for a particular niche market. Asset sales, I think John Key's got a pretty sensible policy in respect of asset sales in terms of that mixed ownership model, and trying to leverage some of the capital we've got tied up in our balance sheet.
Now, apparently he's going to put the capital into a special fund, which means that it's going to go into infrastructure here. The biggest fear, of course, and what the critics will tell you, the Labour Party among them, is that what's going to happen is people like you and me are going to buy up the shares and sell them off to the highest bidder overseas. Do you have any concerns about that, James?
Well, there's always concerns about that, but I guess just like the Fonterra TAF program, it's all in the detail, and it's whether or not that can happen, and to make sure that New Zealand still retains the majority ownership and the control here at home. And I think that's going to be in the detail, and I think that will be what they are trying to achieve. So that the risk around that probably won't happen, in my opinion.
Capital fund, that's a great idea if it's going to be used for things like funding water irrigation infrastructure. The government committed in the last budget to put $400 million into irrigation infrastructure. Where the money was going to come from was always a big question. It's now very clear where that money is going to come from, and that's going to be using the money that we generate, which is basically sitting as sort of dead cash on the national balance sheet at the moment, and putting it into assets that are going to create real value for New Zealand and New Zealanders.
What do you think farmers should really be focusing on to make a rational decision about where the future of agriculture is going to go when they go to the polls on Saturday night?
That's interesting because, Labour are saying they've looked to develop a national agribusiness strategy, which is something I think is a very positive thing, and also got on their side of the slate the concept of a Minister of Rural Affairs. Again,
yes.
Another really positive thing to get that wider view of what's happening in the rural economy. Balance that though with a water policy, which I don't think they've really thought through properly yet in terms of water charging, and an ETS policy which is just reinforcing the existence of a bad tax.
But do you accept the idea of water charging for water? Do you like that idea or don't you?
I think we have to. I think the reality is water is an input. It's going to have a cost, and that cost is going to grow as we start to get more irrigation. So there needs to be some sort of mechanism for charging for water. But the issue is I don't think the policy Labour has developed has yet had very much thinking, because I think it's an extremely complex area and needs to be thought about very carefully.
Of course,
that cost, I guess, in an ideal situation, in that whatever cost that is going to be, then it just needs to be to make sure that farmers are using their water in the most efficient way that they possibly can. So it's not about just lumping more costs and more problems on top of them, but it is just about them making sure that everyone gets their fair share, to make sure that they are using it the most efficiently, and it's going to grow the New Zealand economy.
We've got to be world class in how we use water, and we're not world class in water use at the moment. We're quite wasteful in water use, and as we move into a global economy which is becoming increasingly water constrained, the focus on water footprints is only going to increase. So from my perspective, we need to start the process now of encouraging our farmers to ensure they're using water in an internationally responsible way, and as effectively as it's being used in the countries that have very little water, because that will enable us to compete. And we could find it becomes like carbon and a whole heap of other issues. If we're not competitive in water use, it could become one of those factors that Walmart say, we're not buying your product. Okay,
30 seconds or less. Your best tips to farmers right now as they head to the polls. What should they be watching out for?
Think about water policy, ETS policy, and I think also, what all parties want to do in terms of growing the economy. And because I think if we don't have a growing economy, then we've got a real problem.
It's all about exports, and I think that is a real problem no matter who gets in. Yeah. But that's for another day. James, 30 seconds or less, your advice to the farmers?
Probably along the same lines as Ian.
Stop copying him. Come up with your own stuff.
But I think there is critical, big differences in the emissions trading scheme. Also around the growing the pie. I mean, it's all about growing the share and growing the revenue streams for the New Zealand economy, but also for farmers. And there are some differences there too.
Gentlemen, thank you so much. Coming up after the break, Future Proof on the highways and byways of the economic world. Buckle up as our experts take us along for the ride and point out what they'll be watching over the coming week. But first, alternative milk producer A2 Corporation is expanding into the UK and Ireland, joining forces in a joint venture with leading UK dairy company Robert Wiseman Dairies. It processes almost a third of fresh dairy milk consumed in Britain. So answer this in our Farmers Facts and Figures quiz. How many litres of fresh milk does the UK market supply to its 62 million consumers annually? Find out after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you how many litres of fresh milk does the UK market supply to its 62 million consumers every year. UK fresh milk market is about 6.5 billion litres a year, 3 times the size of the Aussie market. And now it's time for Future Proof. What's coming up for our experts? James, what are you going to be watching?
We were watching France actually, because what we've seen just of the past week and overnight is their bond yields that have been skyrocketing, and that's been something that has happened to all the countries that have got themselves in a bit of a poo just lately, and the other ones that have in the end have had a decrease in their credit rating from the likes of Standard & Poor's and Moody's and that sort of thing. So there's now some question marks around what's happening in France with their bond yields lifting, interest rates rising. Are they becoming more unsustainable long term? So that's the second biggest economy in Europe. If they saw a credit rating downgrade, that would be catastrophic.
What do you really think it's going to be like for the markets over the next 12 months?
I think it's going to be ugly the next 3 months, and we could potentially see two big areas, the US and the Europeans, really taking a real punch down, and it could have some pretty negative effects around the world, but also on consumption levels, I guess. I mean, we've talked a lot about double dip. There's every reason to think that we could be going to double dip in some of those economies. Meantime,
here at home, the politicians tell us, well, John Key's government certainly, that everything can be hunky-dory by 2016 at the latest. I still think that's way too optimistic, because where are the exports going to come from? How are we growing the economy? Ian, your thoughts?
I think we've got a very challenging few years ahead of us. But I think, the impression I'm getting is New Zealand is reasonably positive, and the companies I'm talking to at the moment are reasonably positive about the prospects that they hold out, at least for the next 24 months. I think, we're in a situation where demand for a lot of our products is actually outstripping supply. And while demand continues to outstrip supply, that puts us in a pretty sweet spot. I think this is a government debt crisis as opposed to a trade debt crisis at the moment. My concern becomes that it becomes a trade debt problem, and if people can't get trade finance, then that will start creating issues for us.
One of the hot buttons in the current election debate, of course, is about genetic modification. Your thoughts on that?
Sneaked in there on Sunday, didn't it?
Yes.
Yeah. It's been kept pretty well under the radar until that time. I think it's an issue we talked about in our agenda earlier in the year, and it's one where there is a need for a really mature conversation, and the fact that the paper that wrote the article immediately, it became an emotional debate, and that's a really bad start to an important debate that needs to go forward. It is one that we need to have in a rational way to think where we want to go to as a country in the long term.
Where do you think we should be heading?
That's a very big question. I personally believe that there's two types of genetic modification. There's the cisgenic and the transgenic. Cisgenic is really just accelerated natural selection. To me, that sort of is what most countries have already moved beyond and aren't really calling genetic modification. I think we need to come to terms with cisgenic transformations. I think genetic or the transgenic type transformations is a much bigger question, and one that we need to have a very serious conversation about.
Let me ask you this, James. If National comes to power again on Saturday, how will the rural landscape look differently as opposed to Labour coming to power?
Well, I think we've talked about the emissions trading scheme. There's going to be some, if Labor comes to power, then there's obviously going to be some changes to the emissions trading scheme.
Yeah, we're into it agriculturally real soon.
So that's a major change. That's obviously not going to be the case with National. They are looking at a more structured approach or structured change through 2015, potentially even further, depending on that. Talked about water. I think National's been quite focused on the increases in water. They're also been very, very focused around growing the pie around our exports and developing new products, bridging the gap between research and companies in terms of trying to get more out there and trying to grow the New Zealand economy. Whereas, I guess Labor's trying to do that in some cases, but not quite as well. That's very similar, maybe. They're both promoting trade, so there are some key differences there. The rural landscape, could change a little bit with both decisions.
Well, don't forget to vote like the rest of us. Thanks to my guests, Ian Proudfoot and James Shortall. Be sure to check out our website, and remember to join us Wednesday and Thursday at 9 p.m. for our exclusive series of political debates with my colleague David Beatson as we go head-to-head on all the rural issues facing New Zealand. Meantime, here's a tip. If you want to make more milk down on the farm, maybe you should make more music. Keep the faith. See you next time.